2022 has been a very challenging year from a market perspective, and that has had an impact on product mix. There are many private banks claiming that the 60-40 split, where 60% is allocated to equity and 40% is allocated to fixed income, is no longer working. They claim that there is no outperformance in that. We have seen very remarkable things this year. We have seen the global aggregate bond index down 12%. We have been the S&P down 25%. So that is the ideal backstory for bringing new asset classes to the table. When we speak of new asset classes, we are, of course, speaking of alternatives, and we are, of course, speaking of private markets. I think it's gaining momentum, although we are still far from a retail revolution, Simon. If we take a look at the US landscape, that is the most mature when it comes to alternatives, there is still such a gap in place between institutional investors and private investors. Let's forget about retail, because if you take a look at a pension fund portfolio here in the US, you might come across something in between 30 and 50% allocated to alternatives. But if you take a look at a 401k plan, you might find nothing allocated to alts. And the million-dollar question is why there is such a gap in place if they both should be sharing the very same investment objective, which is retirement.